Welcome back, everyone, to the Risk Intel podcast, powered by SRA Watchtower, where we share risk intelligence with experts from across the banking industry. I'm your host, Ed Vincent, CEO at SRA Watchtower. Welcome to the Risk Intel podcast. I'm Ed Vincent, and joining me today is the CEO of SRA Consulting, Michael Glotz. Michael, thanks for being with us today.
It's great to be here, Ed.
Now, Michael, you have quite a bit of experience in the risk area, right? Having worked in risk and strategy and audit departments within a number of financial institutions of varying sizes, including some very, very large ones, where succession planning was undoubtedly a topic that you tackled as a business unit, but also probably had to experience that a few times. So today we're interested in digging into this concept. It certainly is a timely one given some of the recent dynamics in the market over the last year or so with Silicon Valley and New York Community Bank. So we're interested in digging into this succession planning topic in detail with you here today. So why don't I start out with a kind of an open-ended question or a broad question here, which is, why is succession planning especially important within the risk department?
Yeah, and good question. And succession planning falls under this umbrella of good management, and it's extremely important for all executive management and the board to have good succession planning. But in the risk department specifically, there's 4 or 5 things that are really important, and one is knowledge continuity. And the chief risk officer has a very broad purview and background in the organization. He has to understand the products, needs to understand the strategy, understand the key risk around those products. And that continuity of knowledge is really critical. And that a lot of times that knowledge of the bank, knowledge of the strategy of risk management takes years and years to develop. And so that the ability to have that continuity is critical. And it's hard to get that continuity in a short amount of time. It usually takes ideally years for that continuity. And especially with all the, there's over 150 laws and regs that guide banks. So just having that general knowledge of those laws and regs, takes a lot of time.
Yeah.
Who the people are and where the risks are. And especially as banks now are adapting to a lot of technological change, the use of AI, fintechs, and just technology in the industry, there's a longer and longer learning curve to know and understand that job. And if you don't have that continuity of knowledge, there's a real risk that the risk staff is not properly covering all the needed areas, and there's additional exposure banks have that could cost real-time money in the process.
Right. So knowledge continuity, clearly crucial. Having the time to be able to get to know an organization and understand the various ins and outs. Does that then? How does that then factor into whether you look for an internal or external candidate? And maybe the broader question is, right, what are the best practices around CEO succession planning, and then that internal external question perhaps gets teased out as part of that discussion.
Yeah, if we look at best practices, first of all, kind of under the umbrella of, is succession planning required or not? In most cases, it's not required by regs, except for if you're in a bank above 50 billion in assets. And if you're in a bank above 50 billion in assets, there's enhanced standards for risk management and prudential standards. and they require talent management and succession planning be documented. But so above 50 billion in assets, you have to have a succession plan, and it has to be documented as part of your talent management program. But and we'll hit this topic of, internal or external in a little bit, but that really depends on, a lot of times, are you an organization that has size? Well, I was with Capital One Financial, so I had a documented succession plan for me, and I was part of the succession plan for my boss. And Capital One had hundreds of people in risk management, so internal succession planning was real easy. A lot of our bank clients, as you know, Ed, may only have 4 or 5 people on their risk staff.
Yeah.
And internal succession planning may be difficult. And I'll hit more about that a little bit later. But I would say succession planning starts now. It's not something you do later. Succession planning should happen even if you're appointing a new chief risk officer this week. That's great to know. And there's a whole process around, onboarding that person and roles and responsibilities. But even a new chief risk officer should start thinking about succession planning, the first week or two. And usually, my best advice, having gone through this many times, is as a new chief risk officer, you're going to want a plan, a 2 or 3 year plan that says, here's where we are today, and here's our plan to improve risk management. A lot of times that driven by the RMA risk maturity assessment. That's a good way to develop your plan. But in that plan, succession planning should be addressed. And really, talent management is a broader topic. Talent management is not only succession planning, but training of your staff, recruiting of new people, performance management, all fall into this talent management concept. And those 4, which is the HR part of your risk management hat, getting started early, developing this succession plan. And if you don't have a succession candidate, that's okay. Part of it is, acknowledging that and having it as a task to develop the succession candidate. I would say for each position, like the chief risk officer, or maybe your deputy chief risk officer, defining success criteria is important. Usually a job description defines success criteria, what competencies are needed, what skills, how much experience is needed. So defining those key competencies that are needed in success criteria is the first step in the process, from a best practice. Secondarily, identifying talent in the organization that may be outside of risk management if you're a small organization. For instance, some of the best chief risk officers are people with a strategic thought process, because risk management is all about looking ahead and what can go wrong. So, talented finance people, especially ones that have a strategic background. It could be your chief auditor. In a lot of cases, the chief auditor is a succession candidate to the chief risk officer. There's developmental needs and gaps. Large banks have a succession planning committee that meet occasionally over the course of the year for, sometimes it's part of the board where they're planning on the management succession, part of your HR committee of the board. Usually succession planning is covered under the personnel and compensation committee of a board of a large institution, or even a mid-sized bank. The board of directors has a responsibility to ensure that there's a succession plan for the key management team members, especially the CEO. But typically, the board would want to ensure that there's a good succession plan for maybe the top 5 or 6 officers of the bank, of which the chief risk officer would be one of those key people. Maybe the chief credit officer, chief operation, CFO would be really critical, but the CRO. And then, another best practice is around cross training and rotation. Rotating people. Can you rotate your chief audit executive to chief compliance officer so they get that skills, ability, and knowledge, or rotating your treasurer to a deputy chief risk officer role. So rotating, folks around the organization, and then, having your succession plan in writing is another best practice, because you can do a lot of thinking about it, a lot of discussion about it, but when the need for succession happens, and sometimes it happens quickly, there's nothing like having a written document that says, here are potential individuals that could take the role. And in some cases, the succession plan in a best practice is having a backup as maybe even a high-priced risk consultant that can step in for if this is an immediate thing that happens unexpectedly. Could you have very talented fractional chief risk officer step in for 30 days, 60 days, 90 days to bridge the gap, maybe even help you recruit that person. And if that person isn't an internal person, that's one best practice. And another best practice is you might have a deputy chief risk officer that's not fully ready, but is a logical candidate. Might be a year away from bringing on that role, and bringing on a mentor that was a former chief risk officer that can help work with that chief risk officer to help get them up to speed and institute their own best practices. So those are some of the ideas I had on that one, Ed.
I appreciate that, Michael. So I jotted down a number of those points there as you're going through it, right? Having a job description with success criteria and key competencies, identifying talent within the organization, even if they're not in that risk department, which if they have that strategic thought process, using the board committee, whether it's a succession planning committee or a comp committee to tackle this issue. Cross training and rotation, I think, is a great theme there, and rotating, whether it's from audit to compliance or treasury to deputy CRO, as you mentioned, making sure that the succession plan is captured in writing, and then having a backup plan in place. I think that's a great point there that you can use either reactively or proactively, depending upon what the situation is, and having a risk consultant at your fingertips on a fractional or a bridge basis to mentor someone that just needs a bit of work to get there, or to cover the gap on an interim period, or to go out and seek a new chief risk officer. So a whole set of fantastic best practices there that I think are really actionable for a bank. Michael, thank you very much for your time here today. We appreciate you sharing these thoughts. Really valuable and insightful, and hopefully we've given people some things to think about, and certainly with SRA Consulting, you guys have some of the expertise that we talked about, from fractional chief risk officers to help bridge and mentor through some of these transitions, and also the experience of what it takes to find a great chief risk officer. So certainly I know you could be helpful to folks if they have further questions in this area. So thanks for being here.
Thank you, Ed. Have a great day.